Hello everyone, welcome back to another monthly analysis. You can notice that I've changed the setup today. I'm using my tripod today and I'm using my mic. So let's see if this is worth doing, because I don't even edit my videos. I just do these videos for myself to watch them back. And if it helps anyone, fuck it. That's good, man. You know, that's why they're online. I would have, or otherwise I would just like put the videos out for myself, kept them in my hard drive, but yeah. Let's get straight into the video. So last month the forecast was correct, as it's always been the last two videos that I've made, and also in the last 6 months. I'm on a 6-month streak where I just call out prices monthly levels, and I just get them right by coincidence. Of course, it's not by coincidence. That was sarcasm if you can't read my sarcasm. Well, anyway, I was bullish on the dollar. A lot of stuff were just calling out bullish dollar for me. And I said that these were my targets. Let me show you on the charts what my targets were. Yep. I said that this gap would be my initial target, and my second target would be this daily mitigation block, which we literally created the high of the month at, you know, and then this right here, a weekly order block or a daily mitigation block. Right, this weekly order mitigation block, right? Or you could use this level. Both levels are as significant. And that's literally was the high of the month, you know. And was it a coincidence? Was it not a coincidence? It's up to you to judge, you know, because I don't give a fuck what you say, coincidence or not. It's just, it happened, and it's been happening the past, like every single fucking forecast that I make. So I don't know. Do I have a crystal ball? Do I don't know. I don't know what I'm doing. I don't know. And I guess it's just a secret. Maybe when I think about doing a course, I might just explain my secret there. But I don't know. It's too early for me to do a course. Maybe later on in my trading journey. You know, because I don't want to start off being that guy that was selling courses. I want to show my journey and how I went from nothing to being that guy, you know, that calls the market out. Anyway, so I had these targets for the dollar. I said the euro would go down to this gap, possibly this previous day as well, but no, we just we just stopped at this gap, and then I said that I would want to see how we react off of this gap, which I later saw. And it was a nice reaction, exactly what I was waiting for. It was a nice reaction off of this gap, right? In a discount level, from this low to this high, we're below the 50%, okay, which is discount. And we had this monthly gap in that discount area below this previous month low. Beautiful. Move higher, okay. Not many PD arrays to work with throughout this move higher, but we do have this daily breaker. I think this could allow us to push higher, maybe into this previous month's high, or maybe eventually to this previous day's low and or body. But we'll get to that once I start the monthly analysis. Let's continue the review of last month. So CAD, I said that the CAD, I would expect it to go into the previous month's high and possibly into this previous month's high, okay. And it did. What did the CAD do? Yeah, it was this high that I had marked out, and we were here. Yep. So we did go into this high, and now we're marching slowly still to this high, potentially, possibly. We'll see. Moving on, the pound the pound has been in consolidation. I did not really trade the pound at all this month due to this bullshit, just sideways price action, looking like a fucking USDT, looking like a stable coin out here. So I was just away from it the whole time. But we did take this low out. I thought we'd go maybe into this gap, and we did not. Now this only shows accumulation on the pound because the pound and the euro are correlated pairs, I guess. The euro's economy and the pound's economy, which is like the UK's economy, they move somewhat in sync, right? So at a point of which you see a divergence, you see a disagreement in a move, then that could just be a move pushing price to a discount level that would just be accumulated more at. So what the fuck did I just say? I'm basically explaining SMT the way ICT describes it. So over here that we took out this low and we didn't take this low, okay? But this low was filling a void, okay? A buy side imbalance inside inefficiency. That means this move lower was only for further accumulation. If you can see it, this move lower is only for more accumulation below this low, because this low was held, as you can see, meaning this is another one, a lower low while making a higher low. This is a bullish SMT. This is bullish accumulation. So the price did not want to go lower, as the demand for the pound was so high at this point that it did not allow it to go lower. On the other hand, the euro did go lower, okay? And because of the pound being in higher demand over here, right, and the euro moves along with it, that's why we see both of them expand higher. All right, so maybe this would be the next target, right? But I'm not really looking at the pound currently that much because I just don't like, I don't want to be in situations like these. I can forecast it, sure, but on a daily level, I don't want to be caught in a wick and then just, and yeah. Moving on. It's not giving us the best setups, but the euro is. And that's why you should always have two pairs. Whether you're trading the NASDAQ, you should also be trading the S&P, in my opinion. I don't think you should be trading one. I think it's just a stupid idea. If you're trading the bonds, you should trade at least two bonds. You should be looking at the triad, the 5-year, 10-year, and 30-year. But yeah. So off to this month's analysis. So starting off the analysis, let's make myself smaller so you can see this better. So the seasonalities. Okay, let's start off with the dollar. Seasonally, March creates the high of the year. Okay, now this year is an election year, so seasonalities might differ a little bit. Let's just check out if that is true. That is true. Okay, over a 3-year period, which is not very significant. Do I have another one that's more than 2 years? I don't know. Okay, but still showing the same thing. So March would create the high of the year and then we just be pushing lower all throughout the end of the year. Now, this does align with my technicals. This does align with my charts. And I can see this idea on the charts of us going lower from here. Do I see us going higher again? Possible. but I'll give you my points of invalidation for this idea. Okay, let me just get this shit off my chart. Okay, so we're at this level, this high time frame significant level. So for us to keep pushing higher, I don't want to see us move below the 50% of this order block, which is really at here. Let me draw a line. Make sure it's exactly it. I think this is the very last line of defense for the bulls. The mean threshold of this last down candle before this move higher. The last area of institutional sponsorship in this leg higher. So if you wanna see prices, if you wanna see higher prices for the dollar, lower prices for everything else, then I wanna see not everything else, but you get what I mean. The pound and the euro is what I'd be looking at. Then I wanna see us start moving higher from here, okay, to eventually take this high out, okay, which would confirm my seasonality. If we're gonna go higher, we should go higher maybe to fill this gap. First of all, this monthly gap. So this would be the initial target. If we're gonna push even further, we can go to this over here. Do we have any weekly? Not really. We do have the 50% of this order block, but or actually propulsion block, whatever, order block, propulsion block, whatever you want to call it. But I don't think that's the highest probability right now. And I'll explain why as we go on. Moving on. Quarterly shifts. The last shift that we had was in January. Okay, and I called that shift as it was happening. I think on the 2nd of January, I was like, this is a bullish shift. I think it's high probability, and that's why I said January would be bullish. Then February, I said it would be bullish because we still did not meet this target. Now we met it. So could we be bearish from there? Could we be switching bearish? And what would the targets be for a bearish shift? What would, if this is a bearish shift right here, okay, the target looking back 20 days would be, first of all, this previous week's low, and then this previous week's low, and then this daily order block. Okay, those are the targets if we are in a bearish shift coming off of this monthly gap. If we're still in the bullish shift and we had not finished that yet, because there's no proof of that yet on the chart, because we have still been respecting down candles, this down candle, until this is if we're going into this down candle with aggression, with fair value gaps, with imbalances, okay, while respecting these two up candles, then I think this is not going to hold, and that is my confirmation for a bearish market structure shift. If you want to learn more about market structure shift, watch my last monthly forecast. I had a free tutorial, I guess, on how I perceive a market structure shift somewhere in the video. Just watch the whole video. It's like 33 minutes long. if you'd like to. But if we're not yet in a bearish shift, then this order block should hold, as I just said, and we should start going and we should be respecting this down candle. Okay, we should be attacking this high next, this high, and then this rejection block. Okay. The US still leads in interest rates, and follows that is the British pound. Why? Because, and that's why we've been in consolidation. We've been in a consolidation for the pound because interest rates have been really close. That's the main reason. I believe that could be. And the euro, it has a bigger differential between, there's a bigger gap between the dollar and the euro in interest rates, making the euro the weaker currency than the pound. So you would see better moves, you know, a more explosive price action. Now looking at market profiles, okay, so are we in trending, consolidating, retracing? So I see that we have retraced, okay, we have retraced back into the premium level over here that we've called out last video. And now we could be pushing lower. If we're going to push lower, I think we're going to go to this previous week's low. And maybe by the end of the year, eventually take out last year's low. Was this last? No, this was last year's low. Last year's intra-year low, whatever. Okay. So, yeah. That's what I think is possible. So we are bearish in the market profile. Now, looking back 9 to 8 months, we see that we have taken out internal range of liquidity, okay, into this gap, and then we've pushed lower. We're seeing this like a very similar pattern again over here on a lower scale, and we could just be running towards these lows in the next couple of months. I think that's high probability. The euro, you have the same idea. We are below 50% of this leg higher into this small gap. Okay. Previous month's high could be the next target. The pound, we got S&T. Okay, so you can see that the euro made a lower low into this gap, and the pound did not make a lower low into this gap. So that is bullish S&T. Maybe next target would be the previous month's high. For stocks, okay, for my intermarket analysis, starting off with stocks, I don't want to call the high of the market, okay, because we've been bullish the past couple of months and we're at literally all-time highs. So there's nothing to say about bearish market structure or reversal, right? Because there's nothing to predict off of. There's no price action prior to this that I could refer back into. So I'm just gonna be bullish for the month for the stocks. Bonds. So for the bonds on the monthly, we do have this gap. We don't have to fill this gap, okay? Because the 10-year did tap into it, the 5-year tapped into it, and the dollar tapped into its gap. Okay, so this could be SMT, this could be manipulation, like I just described. On the weekly chart, we do have another gap that we tapped into, missing this monthly gap. On the 10-year, on the weekly, we do have this gap that's not being respected. And then on the 5-year, this monthly gap beautifully respected. This weekly getting violated right now. So I think this would be the next target, this previous low. And the dollar as well, hitting its monthly gap into this weekly order block or propulsion block, whatever, or whatever, reclaimed order block, whatever. And previous week's low would be the target as a weekly target. Moving on to commodities. What did I speak about gold last month? I'm interested to. What did I talk about gold? I said, okay, that we are bullish and this the previous week's high should be the very next target. Okay, COT is also bullish. And yeah, we took out this previous week's high. Now the next target would be the daily rejection block, consequent encouragement, and the previous month's high. For crude oil, for crude oil. Let's look at crude oil on the chart so we can talk about this so we can see this together. So we do have this gap. We went into this gap and then rejected. Next month, after having this rejection, we then just pushed higher, okay, off of this order block, and we went for this high. I think the next target would be easily this mitigation block. It's very obvious. We have taken equal highs. That's all I see as institutional levels. Now going to market structure and PD raise. So the euro, we're at this OTE level. We're at a breaker block. I think we should push higher this month off of this level into this previous month's high, into this daily mitigation block. And that's my monthly level. Those are my monthly targets. And looking back 20, I see this high as my target. Looking back 40, I see this mitigation block as my target. Looking back 60, there's nothing to see. But if we do not respect this breaker, okay, and we start violating these lows, this is my next target, okay, and this would be my next target. But I am bullish. I want to see us go into these highs. For the dollar, we're coming off a previous day's high. I think we should be pushing towards this. We should now respect the 50% of this down candle, going to this previous week's low, and then this daily order block. If you do respect this, then my whole idea would switch over into just a continuation, a bullish continuation, taking out this high, and then eventually this high, maybe filling this gap, and going to 50% of this mitigation block. Okay, so let's summarize everything. So seasonal tendencies, bearish for the dollar, okay. Quarterly shifts, we are still in a bullish shift. I don't see any reason to change to say that we're just in a bearish shift. I don't see a bearish shift right now, okay. The last shift was in January, okay. March is not the next shift, or is it? Let's see. It is in March. Okay, we are at a bearish shift. Okay, I did not. Okay, why? How did I not see that? Okay, so bearish. We are bearish shift. We're on the bearish, but we don't see that yet in the chart. So I don't think that's high probability just yet. I want to see this order block not being respected. So eventually, I would see my next targets be this and this low, okay, and for the euro be this previous month's high and this daily mitigation block. Yep. Okay, interest rate differentials, they're bullish. Dollar is still leading in interest rates. Market profile, we are in a bearish market profile. We're at an OTE on a monthly level. That's bearish. More intermarket analysis. So what did my intermarket? So the yields are they're a bit two-sided, but more leaning to the bearish, okay. So I'd say 60% bearish. Okay, so that's enough for me to put bearish on here. Gold is to go higher and stock markets to go higher. Okay, I don't like the stock market part. That's not very in agreement, but it hasn't been in agreement the past couple of months. It's moving against the way it should, or the way it's known to. So it's not the highest probability thing to expect, but it's been happening, so I'm expecting anyway. I might allow it to happen. And what else? That's it. That's it for Intermarket analysis. Intermarket analysis is confirming my bearish idea. I'm just waiting on this auto block to be respected or not. I want to see more bearish order flow here because there's not much besides this breaker. Okay, I don't see any fair value gap or anything else that's just popping out, just like that's obvious to me. Okay, we have taken out the previous the intra-week's high and then pushed lower this Friday. Okay, the weekly chart is not very clear either. We don't have any obvious levels, so I don't think it's the highest probability thing to be saying that we're bearish just yet. I want to see proof of that, so that makes this unclear. Okay, and this is the biggest part of the whole analysis: market structure and PDRAs. Okay, because we haven't seen any bearish structure shift just yet. So I am bearish, but to be confirmed later down throughout the month. Okay, I want to see that being confirmed with disrespect of discount PDRAs. That's it for the video. I hope you enjoyed it, and yeah, I'll see you in the next video. Bye bye.